On today's show, let's go hunt for dividends. Hi, and welcome to Financial Brew. My name is Candace, and as always, I will be your guide as we take one more trip into the financial verse. I certainly love it when I get questions down below, and one of the most common questions that I do receive is about dividends. People are often asking me, well, what resources do I use to find dividends? How do I find the better paying dividends? How do I find dividends that I can use the dividend capture strategy on? I have a resource that I'm going to introduce you guys to. Some of you may have already used it. I'm going to show you all of the little things that you can do with it that will make it much easier to plan your dividend strategies. So, it's time for Mini-Me. So what we're going to be looking at today is we're going to be looking at a website. It is money.tmx.com. Now, this is a absolutely awesome website. It will allow you to hunt for dividends. It will allow you to really manage any kind of a dividend capture strategy that you have. So I highly, highly recommend it. Now, to be able to have this website be useful, you do need to create a user login. So up here, I'm already logged in, but you want to go up there, do the normal, sign up, the email verification, all of that. And then you'll have your little picture up there too. And then we can actually use the watch list, which is part of the power of this website. Because when you do have your own profile, it will save your watch list so that you don't have to re-enter them every single time you come in, which would be just a pain and make the site not very useful if that were the case. But create your free little login. Then you got your watch list. You can set them all up, and we're going to do some of that today. So I'm going to show you how to set up watch lists. I'm going to show you how to find stocks that pay higher dividends. And I'm going to show you how you can use this with that dividend capture strategy. So we're going to do all of that. Now that we're logged into the front page, if you scroll down, one of the things you're going to see is we got a few different things here. You'll see we have representation of both Canadian and U.S. markets, so you can definitely use this website to look at both markets. We also have our top stock lists. So this is your Bitcoin and crypto funds, so 27 stocks. So if you want exposure to Bitcoin and crypto, but you want to do it through stocks, well, you just click on this, and it will actually show you these stocks. For now, we're just going to zip right on back. There we go. And we're interested in the top dividend. You also have, of course, rising stars and the 52-week high. Let's go into those top dividends. And it will bring us up a list of, the highest paying dividends by yield. So you'll see at the top, we've got LIF, Labrador Iron Ore Royalty Corp. They have a healthy dividend of 23.60%. Now, let's just click on this ticker, and I want to show you a caution here about this one. When you're thinking about using it as a dividend capture strategy, one of the first things you're going to notice is that it's a quarterly payer. It did pay $2.10, which is a pretty healthy amount of money. However, its last ex-dividend date was September 28th. If we look at September 28th, it's right about here. So you'll notice once the dividend date happened, we had a big drop in the share price. That is absolutely normal. Most companies, because that amount is going to be taken out of their balance, the share will drop to compensate for that. If you remember when the dividend capture strategy, we mentioned that as well. So I'll link that down below for you guys. So you'll notice if you had decided to do a dividend capture on this and bought it here, and then you sold it right away the next day, you would have basically taken a loss. It's actually it would have worked itself out in the end to breaking even. So you would have had to pretty much wait for a little bit. And even here, we're still not fully up there. So even though it's a 26% yield, you might only be picking up 13, 14%. So it does take, with these ones, it does take a little bit longer for them to recover their price. I imagine the price will be a lot closer once we get into December and we start heading towards the next dividend date. And it hasn't been declared yet too. So that's the other thing. So you wouldn't want to buy this stock now. Problem is we don't know if they're going to declare 210 again. This may just be sort of more of an aberration. So they do tend to have a floating dividend. So keep that in mind. And those are the type of things that we want to always be thinking about when we're playing around with dividend capture. Now, for a long-term investment, yeah, I think it's probably a nice solid company that you could certainly put it in. You could buy, forget. Keep in mind, too, in situations like this, if you're buying, if you're adding to it, it doesn't hurt to be buying, in these areas and not buying back here. So you don't want to be buying just before the ex-dividend date because you're going to be paying higher when you're thinking long-term investment. So that's something to keep in mind. So now here's the other important thing. We have a watch list. So example is, if we click to add to watch list, it'll show us the watch list we have. I've got dividend stocks, my watch list, and an example watch list. So you can create a new watch list if you just click create a new watch list, for example, and then you can call it, well, you can call it whatever you want. Like we can call this example 2. Perfect. And we'll dismiss that. We're not going to go straight to that watch list yet because I want to show you a couple more things before we go look at the watch list. So now when you click on add watch list, you'll see you've got that example 2 there. Now it's already in there because if you create the watch list from the page of one of the stocks, it will automatically populate in there. Now I don't have it in example, so if I click on the plus, this is now listed in my example, which is great. So that's cool. Let's move back to our list. And you'll notice here, the next one, of course, is dividend 15 split at 18.81%. And this one is actually a monthly, so it's kind of interesting. But so what you would do is you would basically be going through these and adding them to your list. So you just basically get DF, click, bring it down, add to watch list, example 2. We'll hit example 2, and that puts that in that watch list. So you'll do that with a lot of the dividend stocks. So what I recommend is if you're using this list because you want to try to capture some of these dividends, there's a lot of them, there's about 50 of them. Well, add all 50 of them, to your watch list. Now, I made a watch list earlier today, and we're going to go look at that one because this is kind of where this all starts to pull itself together. We go up here to the top. We're going to go up to Stock List and Tools. Then we're going to go to Watch List Dashboard. And here we are. These are our watch lists. So this is the one I made earlier. I only added 13 just to make it easier to see. But we'll click on that and it brings us into that watch list. Now from this watch list, if you have somebody else you want to add, so let's say for example I wanted to add EIT. So there we are, Canoe EIT Income Fund, because I love them. So there we go. We just added that right there. So Canoe Income Fund. Now here's the beautiful thing with this list. You can sort it based on any one of these categories. So price, change, volume. But look it up here. We're on the summary page. So these categories are not really going to help us very much. We're interested in dividends. So we're going to go over to dividends. And we want to, it's already by default, the ex-dividend date, it already sorts it by. But you can also sort by the payable date, by the frequency, any of these categories really. So right now, let's say we're looking for a target to buy some dividends on because we want to hit that next dividend date. Well, at the time of recording, it is November 17th, I think. Let me just double check. No, November 18th. Okay, so all of these ex-dividend dates, they've already happened. So here we go. So the first one up is EIT.UN. Their dividend date is on November 19th. So that's tomorrow. So that means today is the last day I can buy these if I want the December dividend, which will be paid out on December 15th right here. So normally that date is actually when they begin the process of paying you. It takes about a day for it to get into your account. So you'll probably get that on December 16th. So when we take a look at this over here, they have a healthy 9.09% yield. So they're going to pay out right here, so 10 cents on every single share. And once again, you know what you can do? You can just click on one if you really want to go in and take a look, and it'll sort of show you where they've been going. So, so today, of course, is the 17th, 18th. So if we were to actually go back, and let's go to 3 months here on this, bang, 3 months. So if we were to go back and look at the 18th last month, so there's October 18th. So interestingly, with these guys, you'll notice that this is where you would have had to buy. Now they actually kept going a little bit afterwards. So this is one where in October, if you had put all of your money in to do a dividend capture, the day after you would have been able to pull your money out right away, and you still would have gotten that dividend because there it was a little bit of a lag before they had their little drop. So it's an interesting thing. Sometimes I find EIT one of them shares that if you're doing dividend capture on, it's actually very good because they do tend to rebound pretty quickly. So let's go back. So after EIT, our next option, need to go back to the dividend page, is going to be NWX. So if you look at NWX, they have a healthy 16.16. They pay 2 cents a share, but keep in mind they're a penny stock, so you're looking at about 50 cents. Now, if we go to them, NWX, and this time we'll just jump to the 3 month right away. All right, so with them, you can take a look once again. As I said, 2 cents a share, but they're also quarterly though. So that's one of those things too that you got to keep in mind. They are quarterly. Their dividend date is going to be here on 11/23. So if you were to buy up here, it is going to drop. There's just no way around it. That price is going to drop on this, and it is a penny share. I do find sometimes those penny stocks can be a little more volatile. I personally will not do a dividend capture on a penny stock for the simple reason that it's just a little bit above my risk tolerance. So always be kind of wary with those. All right, let's just come back here. We'll just pull this back up again. We'll go back to our dividends. So this is the beautiful thing. As I said, this will update as soon as anything changes. So it's just a fantastic way to really see what's going on with a company. Here's another interesting one. I'm going to put AQN in here. We'll add Algonquin, because I've heard some people talking about Algonquin. Algonquin's been struggling a little bit lately. They are quarterly. You notice their ex-dividend date is December 30th, so lots of time to invest in them. But let's pull up Algonquin, and let's actually take a look at them for the last 3 months. And you'll see, holy banana bread, it's like downhill skiing. You know, they've had some struggles. Now, they are a very solid company. That's what's interesting about this, because I've mentioned before, I've put Algonquin sort of on my concerned list. I'm still pretty bullish. They have been doing a lot of great stuff, especially in terms of renewables. They've been adding a lot of renewables. So I think their future is still rosy. But I'll tell you, this hill has certainly made me a little concerned. Now, here's kind of the double rub on this. With their low price currently, it's kind of almost an aberration as we're heading towards the ex-dividend date. Well, what that means is that their actual, there's their dividend, it's at 17 cents. So that actually increases their dividend yield. Their dividend yield is usually a little bit lower than 4.8. Now I know we're talking about higher dividends, but I just wanted to bring these guys up just because it's an interesting situation with this company for sure. So here's our list once again. Build it up, use it as your tool, use it to keep track of ex-dividend dates. And of course, anytime you are, like if you're looking at long-term investing, be wary. First of all, you want to be diversifying. You want to be doing your own research on these companies, because there's a lot of great companies here, and there's a lot of opportunity to get some dividends and to really beef up your dividend income. But you also want to be wary that sometimes you want to make sure you have a good amount of the blue chip dividend companies like Fortis, for example, or Canadian Utilities, or any of the banks, because those are going to be the ones that if we do go into a bear market, they will absolutely do much better, and they will make you very happy that you have them in times like that. When times are good, like now, sure, these high-paying stocks are looking fantastic, and they're just dropping money into your account, and you're reinvesting it. So, the good times are rolling. But keep in mind, all of those roles do come to an end. Well, speaking of the end, we are heading into that point. I do want to very quickly just add that I am not currently a financial advisor, so the advice I have given you today is for educational purposes only. With that being said, if you are brand new to investing and you are looking to get off to a good start, I got my Wealth Simple affiliate link down below. When you sign up and fund your account, you get 2 free stocks. They can be valued all the way up to $4,000 and change, which is cool if you get that lucky. I also get 1 free stock, just for full disclosure on that. While you're down there, also click on the like, subscribe, the little bell, of course, and there's also a link for a Facebook group for Financial Brew. So definitely join the Facebook group. There's a lot happening in there, and it's also the best way to keep track of what I'm up to and when my videos are going to be coming out. Perfect. Anyway, with that being said, I want to thank you for once again taking a quick trip into the financial verse with me. I will see you again soon. Take care.